Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started. Good morning. Today is Tuesday, May 4th, 2010. This morning we're talking about rate hikes, as in the one in Australia. If you're looking at this chart, though, you're going to see here that the Aussie dollar is actually down quite a bit, and it's the biggest loser today, down nearly 1.5%. Okay, as expected, the RBA did increase rates in Australia up to 4.5%. Okay, but they left a dovish outlook going forward. So it's the market's betting that more than likely they're going to pause at the next interest rate meeting next month. So they're talking about inflation in Australia. Inflation's probably going to be near the higher end of the band, okay, but it's still within target rates. And the other thing affecting the Aussie dollar is risk aversion in the market today. Three things weighing on the market, but one specifically related to Australia is the Chinese slowdown. PMI figures came in China yesterday that were at 6-month lows, showing signs that the Chinese economy may be slowing. Okay, now China is the largest importer of Australian goods, so that could affect the Australian economy going forward. Okay, same thing happening with the Kiwi. Let's take a quick peek here. Okay, the Kiwi's down. They are also, China is New Zealand's second largest importer of Kiwi exports, of New Zealand exports. So they're lower as well today, as well as they came in with their wage inflation figures overnight, which showed that wages have increased at the slowest pace in nearly 9 years. So that's also something weighing on the Kiwi. Let's see, the Looney's also lower, risk aversion today, and oil prices are down as well. Now, what's so risky in the market? Well, it's the Eurozone. Euro is under 131 for the first time in nearly a year, okay, and it's reaching that psychological level of 130. Okay, now there's still concern over this Greek bailout, what's going to happen here, but not only what's going on with Greece, but what's going to take place in the Eurozone going forward. I mean, if you think about it, Greece was just one of these pigs countries that have had problems, and they've had all this battle back and forth about how to bail out Greece. Well, what happens if somebody else has a problem and needs to step up to the window? One of the things really going on here is what's happening with Spain. Spain is a much larger economy than Greece, so if they have problems servicing their debt, then this could be a much bigger problem than Greece. So they haven't really come out with anything saying here's how we're going to handle it going forward. So the market's on edge about it, and as well they should be. Basically, once the market sniffs out a problem, you could see yields in Spain rise. Prices on credit default swaps going up, which in turn could make Spain's cost of borrowing much higher, which could cause them to need a bailout a lot sooner. So that's weighing heavily on the euro right now. And it looks like the Greece thing, while it is a done deal, it still has to be ratified on Friday. Now, another elections, we've got the UK elections on May 6th. Fears a hung parliament. That's really what's weighing heavily on the UK right now. Let's see, they had their PMI came in slightly better than expected, okay, but their mortgage lending was slightly lower than expected. So basically a wash there. But one of the things weighing heavily on the UK markets is the problems with British Petroleum. They are responsible for this Gulf oil spill right now, so they're taking a beating in the stock market, which is also causing the pound to be lower. Okay, lastly, we've got the Japanese yen. Yen's higher on risk aversion, but actually Japan's closed this week. They've got holidays going on known as Golden Week, so there's not going to be much activity out of there, so expect the yen to trade on risk themes. Okay, and we're going to get U.S. dollar. We're going to see home sales a little bit later this morning. So that's what's happening in the market. And as you can tell, the Forex market's a relational market, so not only is a currency driven by, that country's individual fundamental strength, but also can be driven by other areas' weakness. And that's sort of the nice thing about the way the Forex market works. So right now there's a lot of fear in the market. We've got China slowdown. We've got Euro fears, UK elections. There's a lot going on out there. And this can affect dollar and the flight to safety trade. It can also affect other markets like stock and commodities markets. So if you're someone who's heavily invested in these markets, you may want to take a look at the Forex market as a way to hedge your risk and to actually make some gains, because like we say in the Forex market, there's always something going up. So that's what we've got today. Keep an eye out for these risk themes, and good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.